It was a Q3 where we maintained very high business momentum across the Nordic, despite the uncertainty in the environment. And we experienced the solid lending growth and increased market shares across the board in the region, in a slower market, I should say, especially on the household side. What was a bit special this quarter was that the very high activity we saw also in Q2 continued within the corporate sector, and large corporate lending was up 25% year to year. So a quite busy quarter for the corporate parts. All in all, a strong performance, strong credit quality, and then operating profit increased to 1.3 billion euros in the quarter, income up 7%.
About your costs, you're lowering your expected costs in relation to your revenue. What are you going to save money on?
What did you say?
Save money on.
Save money on. Okay. The reason for why we are improving our outlook for the full year 22 is basically due to we are starting to get closer to year end and have a quite good understanding of where we believe it will land. And the current guidance on cost to income, including regulatory fees, is 49 to 50, and we now lower it to 48 to 49, and that is our best estimate for the full year. So it's in line with our plans, and then a little bit better than originally planned.
And about this high lending activity in the corporate sector, as you mentioned, which you also have mentioned the previous quarter, are you expecting that to continue going forward, or will that slow down given the hard macro circumstances that we have?
Of course, it's hard to say, but what we experienced was actually in Q2 an activity level that was accelerating within the corporate sector, and it has continued and actually accelerated even further, especially within the mid and the large corporates. And in the Q3, we saw basically three drivers for the increased lending growth. One was event driven, so acquisitions, sort of strategic decisions. Another one was the energy sector. So we supported the energy sector across the Nordics quite significant with liquidity. And the third thing is the very weak bond market. There we have been supporting some of our high quality customers with lending, basically taking over some of the bond lending. So all in all, a strong quarter, and I can't see any signs or any things that points to that the activity within the corporate sector not should be active also within the fourth quarter.
You could elaborate on the bond market there as well. I'm happy to hear that means business for you. However, that is concerning to the financial system, not least in Great Britain. Is there something to worry about there, or do you think that the situation is under control?
Yeah, but of course it always is worrying when the markets are dysfunctional, and that is clearly the case at the moment. And I think that when you look at the bond market, then of course it is more volatile, and there has been a number of companies that has become quite dependent on the bond market, and when then it starts to really be ineffective, then of course it is problematic. So I think clearly that is something that we should be focusing about and keep a very, very firm eye on. That said, we are of course here to help our clients. So the strong, high quality clients of ours, we will be happy to help when we can, and see a good idea in using our balance sheet for so. But in general, we need effective markets for sure.
And Frank, this is not very unusual when it comes to bank, but when I scroll through the news flow for you during the last quarter, it's quite uneventful for us at least. So I'd like to ask you what you've been working on this past 3 months. What is the most pressing issue for you?
No, but it is many things, as you said. It is, of course, a very concerning environment. I think the direction of travel for Europe, for the world, is concerning now, and there are many things. First of all, it is a reversal from in Europe and as well in Nordics from a very expansive monetary policies for a very long time, and probably also too long time, that we have to reverse from to a more normalized environment. That in itself is a very big task, and probably also a quite painful task. On top of that, we have a war, geopolitical tensions, and then we have an energy crisis. And of course, when you put it all together, then it impacts people's life, it impacts businesses, societies, and as a bank, you are in the middle of that. So we are in a super strong position and are here to help, and are in very good position. But that said, looking at the society, it is difficult not to be concerned.
And speaking of central banks, I'd like to hear your take on the interest rate situation as well. The average lending rate of the major banks is spanning around 4 to 5%, at least in Sweden. In your own report of the economy, titled Feeling the Squeeze, your chief economist states that retail customers with small margins should prepare for really tough times. Are the households equipped to manage rates of 4 or nearly 5%?
Yeah, I think so. But I think we'll have to be a little bit more detail here when I answer the question, because one thing is, I think you see basically three, if you try to simplify it a bit, three different parts. You have the customers that are able to handle it. They could have a mortgage. They have been tested for 6-7%, and they have liquidity. They will manage it. They will be probably spending a little bit less money as they get concerned, as most people are being at the moment. Then you have the part that has to change the lifestyle, so have to change something in order to cover for the increased cost of living, also the interest rates, and of course thereby also, or including that, the energy costs. And then finally you have people that don't have any assets. They don't have an own house. They live in a rented apartment and do not have too much liquidity. They don't have any assets. So can be quite difficult for that customer or that segment. And there, of course, it is concerning that, especially when looking at the energy prices and the food prices. That's two things that I'm very concerned about when looking at the society.
Finally then, Frank, you're kind of touching upon that subject. How severe will this recession be for the overall economy, do you think?
Very hard to say. I'm quite convinced that we will get a recession, and it is a fine balance. We'll have to fight, the central bank will have to fight the inflation using the interest rates. On the other hand, if it goes too fast, then we, as you indicate, we risk a deeper recession. And I think it's very difficult to say exactly how it will land. We'll get through this. That's for sure. But the transition will be a bit tough. And I think that we are probably into 24 or something like that before it starts to lighten up again. That's my best guess.